All right, guys, if you're looking to buy a house somewhere in Central Texas, Austin, Texas area, right now is a pretty tough time to do that just in terms of high interest rates and everything that's going on. I mean, we're July of 2024. Interest rates right now are, we'll call them somewhere between 6.5 and 7.5, depending on a buyer. So as a buyer, you're having some issues with that. You don't want to get those high interest rates. You're looking for something maybe a little bit better. What I'm trying to do is bring you a potential solution. So this is going to be a 3-part series with Ryan Leahy of Leahy Lending. Ryan, I appreciate you sitting down with me, man.
Absolutely, Chris.
And the way that we're going to break this down is this first video, we're going to talk about the solution, kind of an overall thing. We're going to also talk a little bit about Ryan, what he does in the lending industry and the different products and stuff, but we're going to talk about the solution. And then we're going to talk about in the second video how that solution applies to buyers. We're going to talk about how that solution applies to sellers. So let's kick this thing off. Tell us about Leahy Lending. You are in, we'll call it Westlake, Texas, USA. Over here, just we'll call it southwest of downtown, almost due west of downtown. But man, tell us about the business, what you offer, and what you're doing.
Yeah, thanks, Chris. Thanks for having me on.
Yeah.
So I've been doing lending for 23 years here in Austin. I'm a career lender. I don't know anything different. And over that period of time, it's been a great journey. Obviously, real estate's been up and down, right? So I've been through the tech bubble of 2002 and lent through that. Went through the mortgage meltdown and lent through that, and helping clients all along the way. So I've helped clients through bankruptcy and divorce and all the different types of ebbs and flows in the market. Right. You had the downturn in 2010, and so Leahy Lending was founded in the principle: if there's a way to get a loan, we're going to figure it out. And so we offered everything from first-time home buyers, and over the years we've progressed into working with high-end professionals, and we offer everything in between and we have a specialist in each area. With that being said, the market kind of got stuck here in Austin.
That's a good way to say it.
Yeah. I mean, we have some of the most highly qualified buyers sitting on the fence.
That's right.
Because we have the 7 wealthiest companies in the world that call this HQ2 or the Tesla HQ1 now. And now Twitter's coming HQ1 and SpaceX HQ1 in Texas. So, but we have one of the strongest job economies in the country.
That's right.
And there's just lack of motivation from a lot of the home buyers sitting on the fence because of high interest rates.
Right.
And so when I was looking at this about 16 months ago, it was, how do we help motivate buyers and how do we help motivate sellers to accept offers? And so what we realized, Chris, was when we did a real deep dive at the market, what do most sellers have if they have a mortgage that all the buyers want? And it ended up being a low interest rate.
That's right.
I mean, usually our folks have an interest rate below 4%. Right. 86% of all mortgages held in the United States have an interest rate below 4%.
That's right.
So we built a seller financing program around that of showing non-assumable loans and sellers with non-assumable loans with a mortgage. How do they actually give a below market interest rate to buyers,
right, and
have it truly be a win-win for all parties? And so we built a program for that.
So seller financing, owner financing, however you want to, call it. Anytime you approach somebody with that solution as a seller, I mean, you can almost see the visible recoil. Or to a listing agent, no, they can't do seller financing. So talk through a little bit why do people have that reaction if they're a seller or a listing agent or even buyer's agents that may not understand? What's the history behind that reaction?
I'm really glad you asked, because it really is. You ask most sellers, hey, would you be interested in seller financing your home? The answer almost immediately is absolutely not.
Yeah, I don't want to do that. Or I can't do that.
Right. Yeah, or I can't do that. And what we realized was, first off, sellers have been told, or there's the assumption that they can't do it if they have a mortgage.
Yep.
And that's 100% not true. Number two, the assumption is, why would I lend to somebody that can't get a loan?
That's right. Why do they need a loan from me as the seller?
Yeah, thank you.
Why can't they go to a bank?
Right, exactly. Why won't they just go to a bank? And why would I lend to them if a bank's not going to?
Right.
Well, the reality is, A bank will, but a bank's going to lend to them at a higher rate.
That's right.
And today's, like you mentioned, today's interest rate's around 6.8 if they're putting 25% down and have above a 760 credit score.
Right.
But if you are the seller and you were open to learning about seller financing, and it could actually have you sell your home for full price, it was turnkey and hassle-free.
Yeah.
You made more than full price because you actually made interest income every single month after you sold your house, and it offset your next mortgage to getting a lower interest rate.
Right.
Would you be open to looking at that? And the folks that are open to it, we've had more than 300 engagements with sellers. They're like, why doesn't everybody do this?
Right. That was my reaction.
Yeah.
Yeah. It's like, this is a no-brainer for a lot of people.
Thank you. And so, Chris, the history behind it really is, I mean, as I mentioned, if there's a way to get a loan done, I know where to look. And this took me, I hired 11 people full-time with 3 different law firms, and we took this all the way up to Washington, D.C. And to make sure that seller financing did not violate any RESPA or Dodd-Frank or lending requirements that are federally regulated.
Because after you mentioned lending through, '08, the financial crisis and everything that came out of that housing meltdown back then, man, laws changed. Your world changed big time.
Yeah.
So, I mean, at that point, you pretty much better make sure your T's are crossed twice, and same with your I's.
Absolutely. And what we found, and what we hired the law firm that the federal government hires, so RESPA hires to go after real estate and mortgage companies. We hired that law firm.
That break the law.
That break the law. Yeah, thank you. And of course, we're not. So we went directly to the source, as close as the source as we could get. And they said, look, seller financing is actually regulated per state. And so people have to work with a state specialist seller financing expert.
Okay.
And so with the other 2 law firms, that was the law firm number 3. With the other 2 law firms, we built a proprietary process that is a turnkey, hassle-free solution.
Okay.
And the main law firm that we partnered with has closed over almost 15,000 seller financing transactions with wrap mortgages over the last 15 years.
Okay. And I was going to say, a lot of people have heard of wraps. Yep. I mean, in Austin, there's a lawyer that has made a lot of money with his wraps, right? Mm-hmm. I won't necessarily go out and talk about all of that. So that's probably a term that most people know about. But again, when you use that term, a lot of times there's still that visible, like, wait a minute, a wrap, like, that's not normal.
Right.
So,
and there's a lot of negative connotations out there. If you Google wrap mortgages and the subject to, you're going to see, oh, don't do this and due on sale and all the things are the reasons not to. And what we found is that nobody has come out actually with a program that unifies all the solutions under one umbrella and then says, this is how you do it. So we're the first in the country to do this. And we are seeing great success with it on how it works.
You mentioned y'all have had 300 engagements at this point. Mm-hmm. You haven't been doing this you haven't been offering the product very long. I think at this point, 8 months?
Yeah, so we rolled it out in December. Whew. Yeah.
8 months and 300 engagements. I mean, that tells you that it's interesting.
Yeah.
At very least.
We're talking to a lot of folks. And we haven't reached outside of Austin yet. So
that's 300 in Austin. I didn't realize that.
Yeah. So that's 300 just in Austin.
Wow.
And so we're rolling out here in Dallas as of August 1st. Okay. And then in Florida also, as we're starting out in Coral Springs, Florida.
Nice.
Keller Williams office is really interested in having us in. So we're on the books for them.
Now, if the product works in Texas, technically, it works throughout Texas.
Yes, absolutely.
So if somebody's watching this in Houston or whatever, they can give you a ring and talk to you.
Oh, absolutely.
About it. Okay. Yep. Or give me a ring. I mean, I've got his contact. We put all that together. And you mentioned Florida. Are y'all trying to get into other states at this point, trying to figure that out?
So yes, we actually are approved through our Florida title company into 13 different states.
Oh, wow.
And so, but our goal really is just to dominate Texas and Florida first. We understand those 2 markets the best. And so again, this is about being a seller financing expert in your area. The laws vary widely and per state. And so our whole thing is about, we develop seller financing so it goes directly to the letter of the law.
Okay.
The seller is 100% protected in how we go about doing this. And then the buyer also has a win in it as well. You know, and one of the other big assumptions to seller financing too is that sellers think that the term is for 30 years.
There was a couple of questions in my head, and that's one of them. So talk about that a little bit. I mean, a normal mortgage, right?
Right.
It's a conventional loan, 30-year AM, 30-year period to pay it off, and it's, spread out over that time. But that's not what you guys are doing.
Not at all.
I mean, it's a possibility.
Yes.
But that's not what's happening.
That's right.
Okay.
Yeah. So here's what's really amazing about working with a law firm that's closed almost 15,000, right? And so we have an exclusive partnership with them, which allows us to inherit all of their learning over 15 years. Then we've also been engaged over 300 times. And so we've done this now a lot.
Right.
You probably couldn't find another partnership of lender and law firm that have now close to 16,000 engagements and discussing and going through, but 15,000 closings under the law firm's belt, right? And so with that being said, we have figured out what really keeps a deal together. And it's not you. So we help the buyers stay realistic, and we help the seller stay realistic. In our seller financing side, we don't represent the buyer or the seller. We actually represent the transaction.
Okay.
So we're really the deal maker on terms. So we bring the deal together through terms. And what does that mean? Sellers are doing seller financing really as kind of a bridge, or if they had their choice, they would rather sell it just outright and be done. Because the interesting part about our unique niche, these aren't investors that are doing seller financing.
No.
These are primary residence sellers that haven't been able to sell their home, and they're trying to motivate buyers on how to be the best looking person at the dance.
That's right.
Right? And so how do you do that? Well, in today's market, it's with a lower than normal market interest rate. So our sellers are offering usually your interest rates in the 5s, low 5s to mid 5s, depending on down payment and credit score. And so what we do is when I mentioned that these generally, when I talk about the bumpers at a bowling alley, right? We help buyers and sellers stay realistic. And so the time frame generally is 3 years.
Okay.
And what's interesting about 3 years too. Now, Chris, when you bought a home, how many times have you refinanced your mortgage?
Let me see. The first house, I think we did it twice, and we've already done it once in the new house.
Right.
So, but an average of about every 4 years.
So about every 4 years, right? So generally mortgages these days actually only stay in place. The average lifespan of a loan is right around 3 years-ish. So we tell people not get to wrap around the axle of 3 years, because here's the other thing. The Fed has announced that they're making rate cuts in September. That's already been priced into the mortgage market. That's how interest rates went from 7.5 to about 6.8-ish right now. And they've announced that they anticipate doing future cuts coming. So really, what is this? This is an awesome tool for buyers to take advantage of motivated sellers.
Right.
And the sellers to actually sell their home and move on.
Yep.
And then bridge the gap so we can actually refinance that buyer into a real 30-year fixed mortgage.
Correct. Yep.
And the term is usually around 3 years. We've done them as short as 6 months. We've done them as long as 7 years.
Right.
But it all depends on the buyer and seller circumstances.
At that point, you're looking for win-win on. I mean, that's what you're trying to do.
You hit the nail on the head.
Seller's happy, buyer's happy, everybody's happy.
You hit the nail on the head. Nail on the head.
And yeah, it's interesting, thinking about it that way, because one of the biggest things that I hear from sellers at this point, I mean, there's people who would sell their homes, but they're like, Chris, I've got a 2.5% interest rate. I've got 2.75. I'll never get that interest rate again.
That's right.
This actually lets them leverage that and use that for, hey, you're not losing your interest rate. You're using that to actually make money for 2, 3, 7 years.
You bring up a really good point, and I think this is hitting on fiduciary responsibilities as an agent.
Yep.
Now that you know about this, do you feel it's your fiduciary responsibility to actually tell a seller and educate a seller that they actually have a second asset in that home?
That's right.
and it's that underpriced mortgage. Yeah, with that being said, it's a true win-win situation that we're able to do. So as a seller, you can make hundreds of thousands of dollars over a 3-year period of time with your 2.5% interest rate, and when you're giving it to a buyer at 5 or 5.5%. So,
and a buyer can literally save $100,000, $150,000, $200,000 over that same period of time.
bingo.
And that's, I mean, obviously we're talking large transactions at that point. You're not going to do that with a $400,000 purchase price,
Right?
but it's all a matter of scale.
It's relative.
That's right, exactly.
Yeah.
I mean, that's the whole point. Now, the number one, we talk about that visible reaction. The number one thing that I hear from sellers or from seller agents, well, there's a mortgage. What about the due on sale clause?
Yeah.
Because you can't get by the due on sale clause.
That's right. That's right. So I'm so glad you brought that up too, because there was a lot of rumors that, seller financing wraps are illegal in Texas.
Yeah, what? I'm serious. I've heard that over the years, and I'm going, no, they're not.
No, yeah. Obviously, seller financing has been around forever.
Yeah.
I mean, as long as, people have been selling houses. Then you have the mortgages. And so we came up with an intellectual property process that allows us to structure the mortgage through in a setup, the new wrap loan that gives protections.
Right.
Is anything 100% guaranteed when you're doing creative financing? No. But
it's not 100% guaranteed when you're doing traditional financing.
Well, I was going to say the same. I mean, how many foreclosures happen on a traditional financing when people go through the process, right?
There's still mortgage fraud and people who don't tell the whole truth and the things, right?
Yeah,
it happens.
You hit the nail on the head. But out of the law firm that we've partnered with, again, done almost 15,000 transactions over 15 years. They've had, through our structure that we've created, through their structure that they created prior to overlaying our new structure, they've only had to deal with the due on sale clause being called 25 times.
Jeez.
Right around there. Actually, I talked to the attorney the other day. He said it's less than 25. But
wow.
So out of 15,000, you've dealt with it less than 25. Out of all 25 times that the due on sale clause came up,
right,
they were able to mediate it. And when I say mediate, there weren't attorneys involved. The law firm does represent the seller throughout the transaction, cradle to grave in our program. And so the law firm is able to keep the loan in place and all original terms stayed and no big deal. And it was put back together.
Hey, by the way, this is what it is. And then the original lender's like, oh, okay, cool.
That's right. But it truly is a don't ask, don't tell.
Yeah.
They're in the deed of trust in the state of Texas. It does say the lender may call the note due. Here's what's really amazing, Chris. If you transfer your home from your personal name to an LLC, you broke the due on sale clause.
Correct.
If you transferred it and added a partner to a house, you broke the due on sale clause. So the due on sale clause is broken all the time.
Right.
And so lenders, two things. One, lenders don't want your home back.
Nope.
Particularly if you hadn't missed any payments, they don't want your home back.
That's right.
They figured that out from the mortgage meltdown. That they are
too
not
much money to be lost if they have to resell a home.
That's right. They don't want to be in the real estate business. No. They want to be in the home payment business. Right. So when you look at this whole thing, and you'll have lots of folks after watching this that, it's just a seller financing wrap. A seller financing wrap, first off, try explaining it to a seller. And if a seller understands it, try to explain how to a realtor to market it. And then if a realtor can market it, try to explain it to a buyer's agent and a buyer and actually have it all come together.
Yeah.
It's a highly complex process. Like I mentioned, it took 11 people 7 months with 2 law firms to figure it out. And we're about as creative as they come in the business.
Right.
So, I throw that together out there. We've built this turnkey package.
Well, and that's the thing. It took, because I talked with Ken before we did this and talked with you a little bit.
Yeah.
And it literally took me about 15 minutes to go, okay, yeah, I get it.
Yeah.
It's not a complex thing. It makes sense. You go through the process. I mean, and then at the end of the day, you're like me going, yeah, this makes too much sense for a lot of people right now.
Yeah. Why doesn't everybody do it?
Yeah. Now, I want to kind of let's move ahead a couple of years maybe. Is this product always going to make sense?
Probably not. When interest rates do come down, right? And somebody can get a traditional rate in the mid fives or the low fives, then probably not.
And there's got to be a difference. There's got to be a delta between where the seller has their interest rate and where the par interest rates are, average interest rates.
It doesn't have to be. So we have had some sellers, they're at like 5.25 or 5.5, and they're offering 5.25 or 5.5
really?
in order to help move the house.
That's a good point.
And so, you know, that's what's fascinating about the program. We have folks saying, well, so we've done these as low as 275,000 and as high as almost 4 million.
Okay.
So, and everywhere in between. And we've had non-warrantable condos are really popular on our seller financing program.
I hadn't thought about that. Yeah. Okay.
Because the non-warrantable condos generally at a 9-ish% interest rate with 25% down, and it's usually for a 5-year arm for traditional financing. Well, if a seller's willing to do a 3-year arm at 5.5%, with no points.
No brainer.
Yeah, why not? Right? And so it's really amazing. And so some people are like, well, how much do I have to put down? I think that's a big part of it.
Yeah.
We recommend a minimum of 20% down.
Okay.
But we have had sellers accept 10% down.
Wow. Okay.
And so,
I guess that has a lot to do with the seller and what they need to do, what their next steps are and things like that. So that's just a conversation figuring that out.
You hit the nail on the head. You know, we reverse engineer the seller financing offer to what does the seller have to have for them to move on. So when we understand when you send one of your sellers to us, we're going to have them get pre-approved, so that we understand that they can't agree to a seller financing transaction that's going to prevent them from achieving their goals.
Right.
And then when a buyer comes through, the number one thing that we have to do for our buyers is make sure that they're highly qualified.
Yeah.
I think that's the biggest piece that I missed earlier, or didn't miss, but just comes up now, that this is a program for highly qualified sellers and highly qualified buyers.
And I think that that's something that has been an issue with sellers going, well, how do I qualify a buyer? If I'm going to be a seller financer, how do I know that again, like you said a while ago, well, if they can't get a loan from a bank, why am I going to give them a loan? So how am I going to be able to judge their creditworthiness?
Man, I'm so glad because what we do is that's what we do, right?
That's your job.
That's our job. So we do that on the lending side, right? So Leahy Lending's been doing loans, and we've tied this. It doesn't work unless a lender is making this whole thing come together.
Right.
Why? Because the buyer has to get pre-approved through Leahy Lending. Why? Because we have to protect the seller to make sure they cannot be liable for predatory lending. So we have to if a buyer's pre-approved with another lender, it doesn't matter. They still have to get pre-approved with us. 2 reasons. One, we're going to make sure that all steps are followed to the letter of the law so that the seller cannot be sued or liable for predatory lending. Right. Number 2 is we now understand what that buyer is qualified for. So that buyer might have just gotten a divorce or had a job change and their credit score is a 680. Mm-hmm. And they are qualified at 7.75% because of their credit score.
Right.
Well, the seller on the advertising was offering 5.5, dependent on credit score, down payment, right? So generally the sweet spot is 2 points below what the buyer's qualified for.
Okay.
So that would mean that we would suggest to the seller in that case that if they were advertising 5.25, well, maybe the buyer gets 5.75, which is 2 points below 7.75 for a 3-year term.
Right.
And so we help bring the deal together on how that works. A buyer's thrilled because in that case they're saving hundreds or thousands of dollars a month.
Right.
And a seller's happy because they're making a little more.
Exactly.
And they also get to benefit from the risk-based pricing that buyer might have for that house.
And not only that, and we're going to get to this in the seller segment on that video, but the other thing, and this goes back to the current state of the market, Austin's got a lot of inventory right now.
Yeah.
Buyers can take their pick of houses in just about any part of Austin MSA for that matter.
Absolutely.
But as a seller, if you're able to offer something like this, that, a buyer doesn't have to go to new home construction to get an incentive to buy a house, all of a sudden, wow, that house is the same price, but they're also offering me 5.75 instead of 7.75.
Yeah.
Okay, now that house is worth way more because, I mean, I've been taught over the years, look, 1% in interest rate is about 11% in buying power.
100% right.
So, man, now you're offering, I mean, heck, if a buyer was qualified up to 600 at 775, you know, I'm going to do quick math in my head. Yeah, you're over $800,000.
That's right.
That they could actually qualify for.
That's the biggest
for the same payment.
For the same payment. Yeah, that's what's amazing about this. So when they get pre-approved, that's also the only underwriting process. So they're not being drugged through the underwriting process. By the way, there's no appraisal. There's no formal underwriting other than the full pre-approval on what we do. But then it's for the buyers that are able to recapture their buying power. 2 years ago, these buyers were looking at $800,000 houses.
That's right.
Why is in my opinion, why is the market stuck? Because people are still in their head saying, I could afford an $800,000 2 years ago, but now I'm just going to wait. And now I'm at 600. And so I'm just going to wait till I can afford 800 again.
That's right.
It's like once you drive a brand new BMW and then you go back to your old car, you're like, I don't want to drive my old car. I want the brand new BMW again, right? And so that's what I believe that's one of the biggest challenges in today's instant gratification society that we live in. Yep. And this program solves that.
That's right.
And it truly allows the buyer to save and allows the seller to win and make money, their money over time versus all of it up front. And they end up coming out ahead too.
Good investment for them as well.
So. Yeah. I mean, it's a unique position when you're not getting paid all up front as the seller. But if you're making enough to move on.
That's right.
And
that's what most sellers are looking for.
Yeah.
I want to go, I'm stuck in this house. I've got to sell this house before I can move on to my next one.
That's right. So we help bring that deal together and make that happen. And usually everybody's pretty happy.
Let's wrap the first video on that. Ryan, tell everybody your phone number, and I'm going to put it on the bottom as well.
Awesome. Thanks. Yeah, Ryan Leahy. My cell phone, actually. It'll be 5.
I wasn't going to say cell phone.
No. I tell you what I'll do is go ahead and put our company phone number down there.
There you go.
And it'll be in the bottom. And so that way we can make sure that we can help everybody that calls, particularly with all the calls that'll be coming in.
Perfect.
Yeah.
Guys, make sure you find part 2 and part 3 of this for the buyers and the sellers. Ryan, appreciate it for this first part.
Absolutely.
Talk to you on the next video.
All right. Thanks, Chris.